Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now in today's video, we're going to dive into gold. We're going to quickly look at silver. We're going to look at platinum, palladium, and copper. But gold is the one that's catching my eye today. It has just slammed into a major parallel trend line that likely will dictate a sizable pullback. Now, sizable is relative with gold, right? I mean, we might see a 5% pullback here or so, maybe as much as about 7 to 8%. I'll look and show you guys how we can figure that out. But again, while everyone is clamoring to buy gold, the charts are now telling me that we are now into or kissing a major, I repeat, major technical level that likely will dictate a resistance point and pullback. So let's dive into the chart here on gold. Gold, here it is, right? Since we had this long bull flag, right? Great bullish consolidation. This was our former all-time high going back to April. We had this consolidation. And by the way, this is kind of how I'm analyzing what kind of drawdown we could see is if you just look at this, this would be at most, we would see about a 10% drawdown, 10 to 11% drawdown, right? That was the drawdown from peak to trough in the previous high pivot to low pivot. But this was a great bull flag, right? Bull wedge, as we can call it. And just to show you guys here, you have your trend lines right there. You have your underbelly trend lines right here. We drag it through. There's your bull flag wedge, and there's your breakout and off to the races. Now, from the breakout, from the break of the triangle or the wedge, we've actually gone up about 12%. And so the question would be, on a correction, how would we get back, or what would be the reasonable pullback? And for me, I always look at the former major high pivot, right? So this was your former all-time high. Once you break out of a bull flag, there's oftentimes a pullback to that previous level, which would be only about 3,500, right? I mean, we're trading around 3,800, just under 3,800. A pullback for me would be to about 3,500. Now, again, there'll be lots of people that disagree. That's okay. I'm just looking at the charts and looking at the chart analysis and probabilities. But the kicker here is very simple. If we were to pull back from today's high, taking us back to that all-time high, that would be about a 7.7% pullback. Really just run-of-your-mill pullback. Nothing crazy on that. Now, you might say, well, Gareth just mentioned that we were slamming into a major resistance level. Well, let's take a look at that. What have I found in the charts? Let's go into the charts here. So what we're going to do is we're going to use what I love is a parallel. A parallel channel are one of the most important factors that you will ever find here. And what we do is we basically just connect our lows from the beginning of the bull run, which started in early 2024. All right, this is when gold, by the way, was below $2,000 an ounce. So we're essentially up 100% off of those lows at this point. And we can connect those lows, right? All right, so you may say, okay, that's a bottom trend line. That gives us a major level of rising support, which is nice. Now take that parallel and drag it up to the former all-time high right here before that consolidation level, right? And what do we have? Look at this. Look at that. Look at that. So listen, I think we could go up and actually pierce 3,800, which is only about $25 away or so. But at this point, you have to take this seriously. Now, listen, if you're a long-term investor, listen, I have my long-term gold holdings. I couldn't care less about this pullback. Now, as a swing trader, will I try to maneuver? Yeah, I probably will swing trade it a little bit and maneuver and try to make a little bit of money on a pullback in gold. But as a longer term with my bigger holdings longer term, couldn't care less. And that's fine. If you're in that position, no worries. But again, I more do these videos that are shorter term, right? Like what's about to happen in the next week, 2 weeks, 3 weeks on gold, on the stock market, on different stocks, on crypto, etc. So if we look at this chart again, that's exactly what we're seeing here. Great move up, but it's just slammed into this parallel trend line or kissing it around 3,800 on gold on this chart. Okay, now could it break? Sure, it could. But probability-wise, we should get some sort of pullback. And if we get a pullback, the former high becomes major support. That would be the level you would expect at around $3,500 an ounce. That would be your pullback level. Very cool stuff, guys, to walk through the charts and kind of understand how things, how projections and forecasts can be derived. Now, remember, I did a video recently talking about my upward forecast of this bull cycle, which is at minimum around $6,000 an ounce. I'm still going with that. That doesn't change. What I'm showing you here is a very short-term price analysis on gold over the next few weeks, a pullback, and then we can probably go higher on gold. But again, for those of you out there that are looking to buy gold, You might get an opportunity at $3,500 an ounce, maybe a little bit below. We'll find out. Okay, so let's go on to silver. Silver has hit my upside first target. Now, I say first target because I have multiple upside targets. My first target was around $44 an ounce. I get that target by looking at the weekly chart and going back to your high from 2011 right here. That, again, is what we're right into. Now, all this would be to me as a stopping point, meaning that you basically look for a small pullback, bullish consolidation, and then an eventual breakup. Heck, maybe it doesn't even stop. Maybe it just continues to rip through. That's always a possibility. But this was a level that to me stood out. So I wanted to mention it as short-term resistance. If it gets through this, you're going to the highs from 2011, which basically match your highs from 1980, right? Right here. So you're going to go up to $48 to $50. I actually, as I did a video, I think it was just yesterday, we talked about our longer term forecast. My longer term forecast is $60 an ounce. That would be your upside target for this bull cycle in the next 6 months. But first, a stopping point at 44, then a stopping point at $50-ish, and then obviously the $60 level would be next. Now, looking at Palladium. Palladium, look at this, guys. Look at this trend line. So you had support, 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 breakdown, and then look, became resistance, resistance, and then it broke back above. It became support and support. And look, we're starting our next bull run on Palladium here, folks. I was hoping it would pull back a little bit more first so I could grab more of this, but ultimately it looks like it's heading up. Palladium is probably going to play catch up to silver. Yes, there will be some resistance coming up here at this zone right here. So again, if you look at this, right, we have this low and this high, and then look at this trend line as well. You can also make a case that there's like an upslope. I mean, these are more shorter term lines, but if you connect these lows here, you get right in that same level as well. But suffice it to say, first big resistance on Palladium between 1340 and 1360, and it should eventually get through there and start pushing up even more. And again, if it does that, you could be looking at, again, much higher levels. I still think Palladium has a shot of at least going to $1,800 an ounce just in the next few months, and potentially, really seeing a double off or triple off the lows. Remember, the lows were $800 and change. So, I mean, a triple would be $2,400. And I think that's very reasonable to expect in this bull move. Now, looking at platinum, platinum's already starting to move up. Look, it's already taken out this high pivot. It is intraday, granted, so we got to see. But this was a nice bear flag. The bear flag has now been negated. So that is off the table. The bulls have now recaptured momentum, and realistically, this is going higher here. How high could it go? Let's flip to our weekly chart. And realistically, I would say $1,900 to $2,000 an ounce on platinum. So you're looking at a move up to this former high. So very, very cool. By the way, one little trend line that's catching my eye here, this high to this high, and look at where that gets us. So you do have a little bit of resistance here we have to monitor. Price needs to get really through this, I would say through 1,500. If platinum can get through 1,500, it should head up towards the next resistance. Next resistance would be, I don't know, let's call it a little resistance at 1,550, but then really 17.25 before finally heading up to about $1,900 to $2,000 an ounce. And then lastly, copper, poor copper. Now, copper has been left behind. The bear flag is still fully intact on copper. Now, why has copper been left behind? Number one, the housing market is slowing dramatically. Number two, copper is your closest commodity with oil to giving us a projection of economic activity globally and domestically. So the fact that copper is very much stalled out and not looking good is telling us that smart money in copper, basically commodity investors and big players, they do not have faith in the economy, both in the US or abroad. And that to me is important, because that, again, it doesn't mean that gold can't keep running, because gold certainly is a safe haven, but it does mean that there'll be more volatility in silver, palladium, platinum, because those tend to be somewhat buoyed or dropping based on economic activity. And then it also just speaks to what the economy could face and what the stock market could face. So all of these things are very, very important to notice. All right, guys, on that note, I'm going to bid you farewell. Thank you so much for tuning in. Wanted to get you guys that level on gold. Very interesting. We're right there right now. I'll talk to you guys soon. Have a good one. Take care.